Buckle up. Because something absolutely insane just went down in China, and when I say insane, I mean the kind of chaos that makes a Black Friday sale look like a yoga retreat. Picture this: gold hits record highs. Silver goes absolutely ballistic. People are lining up around the block, fighting each other to throw their life savings at precious metals. And then, boom, the entire thing implodes faster than you can say Ponzi scheme. Companies vanishing overnight, hundreds of thousands of people losing everything, and riot police literally using shields to block cameras while people are getting dragged away. This is the story of how China's gold rush turned into the biggest financial stampede in decades. I almost became one of them who purchased it in January 2026. Let's set the stage. January 2025 rolls around, and gold prices are absolutely flying. We're talking historic levels here. Gold climbs over 24% in a single month. That's the biggest monthly rise since 1980. 45 years, people. But here's where it gets spicy: silver decides it wants to steal the show. While gold is having a party, silver crashes the party with a rocket launcher. This metal surges about 60% in 1 month. Yes, you heard that right, 60%, putting it on track for its strongest monthly performance on record. Now, when was the last time you saw an investment jump 60% in a month? Exactly. Never. This is the kind of move that makes crypto bros look conservative. And naturally, when prices go parabolic like this, what happens? Everyone and their grandmother wants a piece of the action. It's like the entire population of China collectively decided, you know what? Forget stocks, forget real estate, I'm going all in on shiny rocks. Here's the thing though, and this is crucial: China's economy has been rough lately. Property market? Collapsed. Stock market? Volatile mess. Investment options? Limited. So when gold and silver start mooning, it's not just the rich folks getting involved. We're talking middle-class families, stay-at-home moms, pregnant women, even students betting their tuition money. One analyst even predicted gold could hit $6,000 by the end of the year, and called that forecast still conservative. Conservative? When you're looking at a 100% gain and calling it conservative, you know things have gotten absolutely bonkers. Now, enter stage left, Shenzhen's Shuibei International Jewelry Trading Center. This place is basically China's ground zero for gold and jewelry trading. Think of it as the Wall Street of bling, except instead of suits and ties, you've got gold bars and silver materials everywhere. And right in the heart of this glittering empire, you've got companies like DeWar Jewelry. On the surface, these guys look legit. They've been around since 2014, registered capital of 11 million renminbi, and get this, they had backing from state-owned companies. We're talking about Shaanxi Jingqiu Group, a gold mining company. So people thought, hey, if the government's involved, it must be safe, right? DeWar's business model was genius in its simplicity. They offered gold buyback services with basically no processing fees. You could place orders 24/7, trade whenever you wanted, and they promised you could sell back at great prices. It was like having an ATM that dispensed gold instead of cash. But here's what they were actually doing behind the scenes: they were running what essentially amounts to futures trading, which, by the way, is illegal for them to do. They were betting that gold prices would drop. They'd take your deposit, promise you gold at a locked-in price, and then just not buy the gold. Instead, they'd pocket the money and gamble that prices would fall so they could buy it cheaper later and pocket the difference. It's the classic "I'll pay you Tuesday for a hamburger today" scam, except instead of hamburgers, it's literal gold, and instead of Tuesday, it's never. So January 20th, 2026 rolls around. Gold hits a fresh record high, around $4,714 per ounce. Silver's also going absolutely bonkers, touching levels that make veteran traders' jaws drop. And this is when DeWar's entire operation falls apart like a sandcastle in a tsunami. Remember how they were betting prices would go down? Yeah, well, prices went up. Way up. And now they're on the hook for gold they promised to deliver at old prices, except the current price is through the roof. Suddenly, people start trying to withdraw their funds or collect the gold they paid for. And guess what? The money's not there. The gold's not there. The website's not working. The customer service isn't answering. One guy invested 60,000 yuan in December. Come January 20th, he can't withdraw. Try again. Nothing. The owner posts on social media saying, "No issues here, folks." A few days later, total radio silence. Another investor, this one breaks my heart, put in 700,000 yuan on January 19th. The very next day, everything locks up. Can't get his money out. And it gets worse, his children had also invested 4.55 million yuan through the same platform. In one family, we're talking about over 5 million yuan, roughly $750,000, just gone. And here's the kicker: one jewelry store alone was reportedly involved in a scam amounting to 13.3 billion yuan, affecting 150,000 families. 150,000 families. Let that sink in for a second. Now, I want you to picture the scene in Shenzhen. Hundreds of people, no, actually, thousands, descending on the Shuibei area. They're not there to shop. They're there demanding their money back. We've got elderly people in their 70s and 80s who put in their entire retirement savings. We've got students who invested their education funds. Stay-at-home moms. Pregnant women with babies literally in their bellies. Young couples who invested their wedding money, their house down payment, their future. One woman is literally sitting on the ground crying because she lost everything. Another family's entire life's work, generations of savings, evaporated overnight. And what's the company's response? DeWar offers a payout plan where they'll graciously return 20% of the principal. 20%. They're basically saying, hey, thanks for the loan. Here's a fifth of your money back. We're keeping the rest. Other companies in the area had even more insulting schemes: 1 gram of gold per day, or 500 yuan in cash per day. At that rate, if you lost 1 million yuan, it would take you about 5.5 years to get your money back. Assuming they don't disappear first. But here's what really gets me, and this is where it goes from financial disaster to full-on dystopian nightmare. When these people show up to protest, to demand their rights, to ask for their money back, the government sends in riot police. Not to help them. Not to investigate. To shut them down. Police literally used cloth shields to block cameras. They arrested people who were leading protests. They dispersed crowds. Instead of going after the criminals who stole billions, they went after the victims who dared to complain about being robbed. One protester described being sent to different locations, some to a sports hall, some to buildings, scattered around so they couldn't organize. Classic suppression tactics. Meanwhile, while all this chaos is unfolding on the ground, the markets are having their own meltdown. On January 30th, silver prices absolutely crashed, down 6% in a single day after hitting an all-time high of $121 per ounce the day before. On the MCX in India, silver fell from a record high of 120,000 rupees per kg to 95,000, that's a 10% drop, erasing 25,000 rupees just like that. Gold wasn't spared either. Spot gold dropped 4% to $5,170 per ounce after touching $5,594 the previous day. 4% might not sound like much, but when you're talking about gold at these levels, that's serious money evaporating. And here's what's fascinating: the technical analysts are looking at this and going, you know what? This is actually healthy. One analyst called it a blow-off top. Basically, the market got too hot, too fast, and needed to cool down. Translation: yeah, we know everyone's losing their minds, but trust us, this is fine. The underlying drivers that pushed metals to these insane levels, stuff like de-dollarization, inflation concerns, geopolitical chaos, none of that's gone away. All the ingredients for continued chaos are still in the pot. Now, here's where we need to zoom out and look at the pattern, because, and this is the really messed up part, this is not the first time this has happened in China. Not even close. Remember P2P lending platforms? Back in 2018, nearly 10,000 investors who lost everything in these online lending schemes tried to organize a massive rights protection campaign in Beijing. They got intercepted by police before they could even start. Over 120 buses lined up in the financial district. Hotels and public transportation got checked for rights defenders. The whole protest was shut down before it began. And here's the kicker: internet financial platforms were heavily promoted by the Chinese government. The authorities encouraged people to invest in these platforms. Then when they all crashed, the government didn't pursue the criminals. Instead, they pursued the victims trying to get their money back. See a pattern? Tainted milk powder that killed babies. Fake vaccines. P2P platforms. And now gold and silver scams. Each time, different victims, but the same playbook. Companies run wild, people lose everything, the government focuses on maintaining stability instead of justice. One political commentator nailed it: whenever government power infringes on different sectors, victims will emerge and rights protection will follow. After one group of victims is affected, the government moves on to infringe upon another group, leading to the emergence of new victims. It's a cycle. A vicious, predictable cycle. Let's break down exactly how these companies pulled this off, because understanding the mechanics is crucial to not getting caught in the next one. First, they created the illusion of legitimacy. State-owned backing, registered companies, physical storefronts, years of operation, all the checkboxes for "this looks safe." Second, they offered something too good to be true: no processing fees, 24/7 trading, guaranteed buybacks at great prices. In finance, if something sounds too good to be true, it's because someone's about to rob you blind. Third, they disguised illegal futures trading as simple physical goods transactions. You thought you were buying gold? Nope, you were buying a contract that the company was gambling against. Fourth, the sneaky part, they used a Ponzi-like structure. Early investors got paid with money from new investors, creating the illusion that everything was working great. This attracted more people, which brought in more money, which let them pay earlier investors, which attracted even more people, until the music stopped. The owner of DeWar literally believed gold prices were too high and expected them to drop. So instead of hedging his bets by buying the actual gold from suppliers, he just didn't. He kept the money, figuring he'd buy it cheaper later. It's like if a casino decided to bet alongside the players instead of being the house. Except the players are families investing their life savings, and when the casino loses, they just steal everyone's chips and run. While all this gold chaos was happening, silver was having its own spectacular implosion in the same area. Earlier in January, another jewelry company in Shuaibei suddenly closed down. Customers who had purchased precious metal materials couldn't redeem them. The owner? Vanished. Phone disconnected. Company shut. Gone. One business partner had ordered 5 kilograms of silver bars. The store failed to deliver. When he tried to call, the number was deactivated. The person in charge got detained by police on January 14, and the company suspended operations. Over 350 people got involved in rights protection for just this one incident. And here's what's wild about the silver market specifically: silver had gone from around $30 per ounce at the beginning of 2025 to $70 to $80 by the end of the year. That's a 147% cumulative increase in 1 year. By January 2026, it was bouncing between $90 and $110 per ounce, a 30 to 40% jump in a single month. One commodities expert called silver's move meme-ish and said demand for silver had entered meme investment territory. At one point, silver ETFs were seeing inflows several times larger than the S&P 500 ETF. Think about that, more money flowing into silver than into the entire US stock market index. That's not investing, that's mass hysteria. Here's the uncomfortable truth that nobody wants to talk about: this isn't just about a few bad companies. This is systemic. One political commentator put it bluntly: incidents like this are actually a result of the government deliberately failing to regulate or even intentionally creating the largest Ponzi scheme. And here's the thing people get wrong about these scams. There are two common narratives: the people are greedy, so the government isn't responsible, and investors themselves are at fault, not the government. But think about it, in China's economic system, regular people have extremely limited investment options. Property market? Crashed. Stock market? Controlled and volatile. Banking interest? Laughable. Foreign investments? Restricted. Cryptocurrency? Banned. So when an opportunity comes along that promises returns above inflation, people jump on it. Not because they're greedy, but because they're trying to survive in an economy with skyrocketing prices and shrinking options. And these aren't poor people taking desperate gambles. These are middle-class families, the people who are supposed to be the economic backbone of any society. When you wipe out the middle class's savings repeatedly, you're not just hurting individuals, you're undermining the entire economic structure. As of late January, the authorities in Shenzhen's Luohu district issued a statement saying DeWar Jewelry was operating abnormally and they had intervened. Which is government speak for, yeah, we know everything's on fire, we're here now, please disperse. The owner, Zhang Junting, posted a video promising to address the situation and give everyone an explanation. But let's be real, when you've got billions in missing funds and 150,000 families demanding their money back, a video apology isn't exactly going to cut it. Some victims are trying to organize, file police reports, and pursue lawsuits. But history suggests this ends one of two ways: either the government maintains stability by suppressing protests and offering token compensation, or they arrest a few scapegoats while the real money disappears into the system. Look, I know this story is heavy. We've covered fraud, government corruption, human tragedy, market chaos, the whole 9 yards. But here's what you need to take away from this: if it sounds too good to be true, it probably is. No processing fees, guaranteed buybacks, 24/7 trading with no risk. Someone's getting robbed, and it's not going to be the house. This gold rush in China wasn't an investment opportunity. It was a stampede, and stampedes leave bodies in their wake. 150,000 families learned this the hard way. Think twice when investing. Don't pour all your money in. Stay skeptical, stay informed, and for the love of all that is holy, don't invest your life savings in anything that promises risk-free returns.